Welcome to our segment on the foreign earned income exclusion. The foreign earned income exclusion is basically an amount that Americans living abroad can earn tax-free. For 2014, that number was $99,200. For 2015, it's $100,800 that can be earned tax-free. The amounts are adjusted annually for inflation, so they're always going up. Remember that it's the foreign earned income exclusion, earned being a very key part of the name. That means that it's money that you earn basically from working. So salaries, wages, self-employment income, tips from working. What it does not include is any type of passive income. So rents, royalties, interest, dividends do not qualify for the foreign earned income exclusion. Those amounts begin being taxed immediately. So another part of the name is foreign earned income exclusions, meaning that only foreign income qualifies for the foreign earned income exclusion. Under U.S. tax law, the source of income is where the service is performed rather than where the money is being paid from. So you could be working for a U.S. employer that is paying you from a U.S. company, from a U.S. bank account, but as long as you're performing the work in a foreign country, that qualifies as foreign income and therefore would qualify for the foreign earned income exclusion. There's also an additional exclusion or deduction depending on if you're an employee or a self-employed individual that's available in addition to the foreign earned income exclusion, and that's the foreign housing exclusion or deduction. This is basically an additional amount that you can exclude from U.S. taxation to help offset your cost of living while abroad. The foreign housing exclusion or deduction is essentially an additional amount that equals 30% of the maximum foreign earned income exclusion. So for 2014, that number was $29,760. And for 2015, it's $30,240 that can be excluded. Now, the advertised maximum foreign housing exclusion or deduction is not usually attainable, and the reason being is the IRS requires you to back out what they refer to as the base amount. The base amount is 16% of the foreign earned income exclusion, or about half of the foreign housing exclusion or deduction. So even though they advertise a foreign housing exclusion or deduction of around $30,000, really only about a $15,000 benefit can actually be obtained. The IRS does realize that certain countries and cities are more expensive to live in than others, and they allow higher limits for what they call high cost of living areas. Some of the expenses that qualify for the housing exclusion are rent, parking, insurance. Things that don't qualify for the foreign housing exclusion or deduction are interest on a home mortgage. You'd still report that on Schedule A. So, how do you qualify for the foreign earned income exclusion or the foreign housing exclusion? Well, you have to be a foreign resident and you have to meet either one of two tests, either the physical presence test or the bona fide residence test. Basically, the physical presence test requires you to be present in a foreign country for 330 days during a 12-month period. Now, it requires you to be present in a foreign country for 330 days. So you have to be very careful about what days that you count. If you're on a cruise, for example, guess what? There's a good chance you're in international waters. That does not qualify as a day present in a foreign country. Likewise, if you're traveling by air and you're not over a foreign country's territory, will not qualify as a day present in a foreign country. The second test, which is the test that's a little bit more flexible, is the bona fide residence test. The bona fide residence test requires you to be a resident of a foreign country for an uninterrupted period that includes an entire tax year, so basically January 1st to December 31st. Assuming you meet that criteria, there's no day limitation or qualifier where you have to be present in the foreign country. So it's much more flexible than the physical presence test. Thank you for joining us in this segment on the foreign earned income exclusion. We hope you've enjoyed it and found it informative.